The Simple Path to Wealth by J.L. Collins is a practical and accessible guide to financial independence and wealth building. Written as a collection of letters to his daughter, Collins outlines a clear, straightforward approach to achieving financial security through sound investment principles, frugality, and avoiding the common pitfalls of money management. The book advocates for the importance of financial literacy, saving aggressively, and investing wisely in low-cost index funds to ensure long-term wealth. The key theme of the book is that anyone can achieve financial independence by following a simple, disciplined approach to managing money. Collins breaks down complex financial concepts and offers practical advice, particularly for those who might feel overwhelmed by the intricacies of investing or financial planning. Key lessons from The Simple Path to Wealth. 1. Understanding the importance of financial independence. At the core of The Simple Path to Wealth is the concept of financial independence. Collins defines financial independence as having enough wealth to support yourself without needing to work. This doesn't mean never working again, but having the freedom to choose whether to work or not, without worrying about money. Collins explains that the key to financial independence is saving aggressively and living below your means. He recommends saving at least 50% of your income if possible, but even saving 10 to 20% can put you on the right path. By consistently saving and investing, you can eventually build a few money funder term he uses to describe having enough financial security that you can make life decisions without being constrained by a paycheck or job security. 2. The power of frugality. A major component of Collins' strategy is frugality, spending less than you earn and investing the difference. He emphasizes that controlling your spending is one of the most important factors in building wealth. In his view, financial success isn't necessarily about making a huge salary, but rather about being disciplined with how you manage the money you have. Collins advises readers to prioritize their spending by distinguishing between needs and wants, and cutting out unnecessary expenses. Living frugally allows you to save more, and saving more accelerates the journey to financial independence. This mindset shift is crucial. Instead of focusing on material possessions or short-term pleasures, Collins encourages readers to focus on the long-term benefits of financial security. 3. The stock market and index fund investing. The heart of Collins' investment strategy is investing in low-cost index funds. He is a strong advocate of Vanguard's VTSA-X Total Stock Market Index Fund, which he believes offers the simplest, most effective way to build wealth over time. Index funds are collections of stocks that track a particular market index such as the S&P 500, allowing investors to benefit from the overall growth of the stock market without the need to pick individual stocks or time the market. Collins argues that the stock market, over the long term, has proven to be one of the best ways to grow wealth. While it fluctuates in the short term and can experience sharp downturns, historically, the market has trended upward, making it a reliable tool for long-term wealth building. He emphasizes that the average investor cannot beat the market, and trying to do so through stock picking or frequent trading is a recipe for frustration and potential loss. Instead, investing in a broad-based index fund like VTSAX allows you to participate in the market's growth while keeping costs low and minimizing risk. 4. The importance of avoiding debt. One of the foundational principles in The Simple Path to Wealth is the importance of avoiding debt. Collins advises readers to stay out of debt as much as possible, particularly high-interest consumer debt like credit card balances. Debt can be a major obstacle to financial independence because it reduces the amount of money available for saving and investing. Collins acknowledges that certain types of debt, such as a mortgage, can be unavoidable or even beneficial if managed wisely. However, he cautions readers to avoid borrowing more than they can afford and to pay off debts as quickly as possible. Becoming debt-free is a key step toward gaining control over your financial future. 5. FU money. The ultimate goal. A central concept in the book is FU money, which Collins describes as the amount of wealth you need to have complete financial independence. It's the point at which you earn no longer dependent on a paycheck or employer, and can make life decisions without the pressure of needing income. Collins believes that having few money is incredibly empowering because it gives you the freedom to live life on your terms. It allows you to walk away from a job you don't enjoy, pursue a passion, or retire early if that's your goal. Building money is not just about having a comfortable retirement. It's about having the ability to take control of your life at any time. 6. The 4% rule and safe withdrawal rates. In the latter part of the book, Collins discusses how to safely withdraw money from your investments once you've reached financial independence. He introduces the 4% rule, a commonly used guideline in retirement planning. The rule states that you can withdraw 4% of your investment portfolio each year and still have enough money to last for the rest of your life. Assuming a diversified portfolio and average market returns, Collins explains that following this rule can help ensure that your investments continue to grow, even as you withdraw money to cover living expenses. For example, if you've accumulated $1 million in investments, you can safely withdraw without depleting your portfolio. 7. The role of real estate. While the book focuses primarily on stock market investing, Collins briefly touches on the role of real estate in wealth building. He acknowledges that real estate can be a profitable investment for some people, but he doesn't recommend it as the primary vehicle for most investors. Real estate requires significant time, effort, and expertise to manage, and it can be illiquid, making it harder to access your money if needed. Collins' view is that for most people, investing in index funds is simpler, more and just as effective in the long run. However, he doesn't completely dismiss real estate, noting that it can be a valuable part of a diversified portfolio for those who are willing to put in the work. 8. Financial independence versus traditional retirement. In The Simple Path to Wealth, Collins distinguishes between traditional retirement and financial independence. While traditional retirement typically happens at a set age, financial independence is about reaching a point where you no longer need to work, regardless of your age. This concept is central to the financial independence, retire early movement, which encourages people to save aggressively and retire far earlier than the typical retirement age. Collins emphasizes that financial independence doesn't necessarily mean retiring and never working again. It simply means having the freedom to choose whether to work or not, and the flexibility to pursue work or activities that bring joy and fulfillment, rather than being tied to a job out of financial necessity. Conclusion. The Simple Path to Wealth is a straightforward, no-nonsense guide to achieving financial independence through frugality, disciplined saving, and smart investing in low-cost index funds. J.L. Collins' approach simplifies complex financial concepts and offers practical advice for people at all stages of their financial journey. His central message is that anyone can achieve financial independence by following a simple, consistent strategy, avoiding debt, and understanding the power of long-term investing. By focusing on the basics and staying the course, readers can build wealth and create a secure financial future.